Hello, everybody. It's Mahmood here. Hope you're all doing well. Let's kick in with some comments. Naomi, how are you today? So that's it. I can see Naomi. Just checking that we've got sound. We just check the technical stuff. I'm just going to put my headset on. And Naomi, good morning to you. Good afternoon, I suppose it is now. Can you just give me, I don't know, what is there like a live emoji or something to say you're there? I can see you well in there itself. We'll kickstart in a second or two as people coming in. So we're going live there. Perfect effect. Good afternoon to you. Hope you're all going well. Hope you're not going stir crazy, watching too much repeats of Homes Under the Hammer, watching repeats there. Line of Duty's still on being rerun, so obviously worthwhile watching that. So we're going to sort of not delay. This is on record, everybody. So if you want to obviously catch up with it later on, if you go and grab yourself a glass of wine or something a bit stronger or something less strong, feel free to come back to it later on. So what I'm going to do today is it's a very uncertain climate at the moment. Some things are settling down in terms of what we know, what we don't know, and yet to know in terms of financial support for this very strange and turbulent times that we find ourselves in. So what I'm going to do, so in terms of how we're going to structure this as such, you've got the comment box at the on your screen. So obviously, as we go through, if you've got questions that you want to fire at me, then fire them away. Probably feels a bit like a school exam here. I'll do my best to answer them as we go through. I'm going to focus on what I would consider to be the key questions that are being fed to me and I'm seeing in sort of forums in virtual space. And we're going to be covering quite a number of eventualities. Excuse me for a moment or two. My wife Serena has told me off for not drinking enough water, so she might be listening in. So I need to make sure I do as I'm told. So we're going to be looking at all business types to a large extent, from self-employed to corporates, one-man band, answering some of the common questions like, furloughing, that wonderful word that's imported from the States now into the English dictionary. We're going to see what that means, and hopefully we'll have some good news to share as you go through it. So let's make a start. Again, if you're coming back to this later on, it's all on record. And what I'm going to kick off with, so just to make it useful, what I've done, I've just structured this into about 9 areas that I think are going to be useful for all of you to get familiar with. Again, there may be questions and answers coming up that don't apply to you directly. There will be, hopefully, we will be covering things that impact on your immediate sort of concerns. A few sort of general housekeeping things, by the way. Because there's so much information that's being fed in virtual space, social media forum, different platforms, which is great. Everyone's diving in. It's making my head hurt. So I can imagine it must make everybody else's head hurt here. And we're getting to information overload as such. And it feels quite painful, quite stressful, and it's difficult to know which way to go. My observations are, from what I've seen, a lot of the information that we're finding on different people's platforms, which is great to get the word out there, is largely a repeat of what's already published on the HMRC website, literally without any sort of cutting. It's just straight cut and paste, which is fine, but effectively there's nothing new necessarily. Secondly, I've come across quite a lot of information which is flawed, inaccurate. I wouldn't say there's any malice behind it, but effectively it's wrong. I've dealt with some people directly with our client family who've been telling me they've been advised X, Y, Z, and it's being polite, not correct. So if in doubt, obviously speak to me directly. We are sharing this information on a regular basis. We're trying to get to the detail as opposed to just repeating pronouncements. You should be on a sharing list, so you're getting this all the time. Obviously, hmrc.gov site is always going to give you alternative angles. And the only other third-party site that I would recommend is my favourite personal money man, Martin Lewis. His site and what he says is spot on, and therefore you've got those areas covered. So that would be my recommendation. Other things in terms of housekeeping, unfortunately, circumstances like this mean that there's a lot of people out there who are going to be taking advantage, spamming, fraudsters, scamsters, whatever you want to call them. So if you get any message whatsoever, however innocuous and genuine it looks, that says, we will do this claim for you, or give us your details or anything of that nature, my advice would be press delete, do not pass go, and do not participate, because it's very likely to be a scammer. I have seen some examples already floating around. So again, just be careful out there, everybody. It's a very easy pickings for a lot of people who've got no ethics, who are going to take advantage of the circumstances we find ourselves in. Now, Naomi and Yvette, can I just check before I proceed? Is this coming through okay? Naomi, are you with us? Yvette, I know you said hello. Okay, I'm assuming it's going to be okay. So let's continue. Perfect. Thank you, Yvette. So what I'm going to do here is just break this down into sections. And here's the first thing I want to talk about. So on the bottom of the screen, by the way, it's a ticker tape. This is as much to remind me what I need to speak to you about. It's a bit like prepping for a school exam here, so making sure that I don't miss anything out here. So that's just a ticker tape and reminding us what we're going to be talking about. Now, I think what we need to begin with is to think about... Hi, Pedro just coming in. So just what I want to talk about is just clarify some of the language that's going about there as well. Now, we are going into the territory, by the way, of HMRC. We're talking Treasury, we're talking government policy, we're talking money. So the language that's particularly used to drive the conversation may not be the same language that we're using in our everyday lives, what normal people would actually use. So one of the key ones there's a lot of confusion over, understandably, is the phrase self-employed. Now, for many of you, if you're running your businesses, there's only 2 or 3 in a team, it might be quite a small team. In reality, if we were having a conversation over some food or just in the office or over a drink, we might be talking about being self-employed, because we mean we're working for ourselves. And that's largely true. In the context of HMRC, though, if you conduct your business via a company, so you've got a name and you've got limited at the end of it, then you are not self-employed in the eyes of the legislation that we're talking about. You are working for yourselves, but your business is conducted through a company vehicle. And we're going to talk about companies later on, by the way, but self-employed, alternative phraseology that you might come across, hi Pam, is going to be things like sole trader. If you think of yourself as a freelancer, anything that you do where you invoice your client without a limited in your name there as well, you're not registered at the company's house, means you're self-employed. So again, we need to differentiate there, because there are some support systems being provided to self-employed only, and there are some that are being applied to companies only. There are some that are being applied to both. So again, just be very, very careful. So your status is your start point here. And that also applies, by the way, if you are running a partnership. Thanks, Richard. Thanks, Pam. If you're running a partnership, by the way, and it's not running through one of these fancy what are called LLPs, so it's 2 or 3 or more of you together, running a business together as a partnership, you are still classified as self-employed in the eyes of HMRC and the Treasury. I say the Treasury, by the way, because the Treasury are the ones who are writing the rule book. They're the ones converting it into actual detail. And obviously HMRC, the body of it, are going to be the ones who are going to be implementing a large amount of these schemes, by the way. Hi, Simon. Now, as we go through, by the way, what I always tell any group that I speak to, I now have a tendency to speak like a machine gun. We've got a lot to get through. If you're missing anything, please feel free just to throw those questions in the chat box and I'll address them as we go through. So that's just the first thing. Self-employed, you're not running your business for a company. If you don't have a company, you're self-employed. So let's have a look at the next thing. And this is announced effectively. Here we go. We're talking about the recent announcement 2 or 3 days ago. I'm losing all track of time, by the way. I think it was a couple of days ago. Talking about what I call self-employed grants. Now, the good thing is, by the way, the nature of the word grant, if you see the word grant floating about, it means that that money you receive does not have to be repaid back. And again, my usual thing, when I've been looking at this, doing my homework, checking the detail here, there are always caveats, which I'm going to mention at the end when we talk about compliance. So please do not expect somebody on the street just to be giving you out a suitcase of cash. Anything that involves the government, HMRC, understandably, there will be what I call compliance sitting behind it. So there'll be rules, there'll be regulations. The government are going to do their best to make it as light touch as possible, but they also have to be wary that some people may want to, shall we say, be a bit naughty. They want to make sure the money goes to the places they've said. And unfortunately, in all the schemes that I'm going to outline, there are unfortunately going to be losers, some people who will not get a great deal of financial support because of the nature of the business they're running. That's unfortunate. That's the way it is at the moment. It may change next week. So again, we just have to bear that in mind. So let's have a look at the first of the grants, the headline. So that's £10,000. That's the cash grants later on if you occupy a property. Here, I'm talking about the grants that are going to be based on if you are a sole trader, a freelancer. And first of all, let's look at the conditions. Now, first of all, if you're registered in the 1920 tax year, that's when your business started. It could be a side hustle, by the way. If it started on the 6th of April 19 onwards, you will not get any of this grant that's being provided. So you don't qualify. HMRC want to see at least full 12 months. So the earliest start date is the 18-19 year. Now the calculation will go as follows. They will look at the last 3 years of accounts that have been sent in and tax return. Pardon me. And obviously, if it's less than 3 years, as long as you've got 12 months there or 18-19, that's fine. Number two, they will look at those numbers and they will look typically, by the way, at what's called taxable profit. So if you are a self-employed individual, providing whatever you're providing, you work out the figures. Some of those items, as you know, because we bore you to death with them, are going to be disregarded for tax purposes. So whatever that tax figure is the start point. Hi Nadia, I'll come back to you on that one in a moment. I hope you've got some good news potentially for you. So as far as, so Nadia, welcome. So as far as the self-employed is concerned, eligibility 18-19. Anything after that year, computer says no. Number two, the revenue will work out a figure. The cap, by the way, if your profits average out, brackets in 1 year, based on the guidance so far, exceed £50,000, you will know you won't be able to qualify. So what will happen is they'll take those figures, assuming crudely you're a basic rate taxpayer. They'll take those figures, they'll average them out, work it out onto an annualized figure to ultimately get a figure per month. 80% of that will be paid over, and the maximum grant you will get is going to be about £7,500. When I say is about, it will be £7,500. Now, in addition, having got the eligibility criteria, having worked out the numbers, having worked out if you're going to get it, 2 or 3 things to note. First of all, based on the information that's been distributed, it's likely that you'll get that money around about June time. So when you do your calculations, work out how much you need, you're going to have to wait until around about June time. Possibly, Pam. So, yeah, unfortunately in all of this, Pam, there's going to be some losers. However, if you don't meet the eligibility criteria, there may be other things inadvertently that you can actually plug into. Now, let me just carry on with the eligibility. So 50K, average it out. There are some caveats when we talk about the compliance. Now, absolutely critical here. You do not have to do anything, by the way, to pursue the grant. It's going to be done by HMRC themselves. And they will look at the records. They will invite you to apply. You have to fill in a particular online form. It has not yet been built, by the way. But I've come across some people who are getting all their information together, understandably, and thinking they're going to have to submit it. HMRC has got everything they need. They've got your records, they've got your information, and they will start chugging through the system. So they will check their records, so who's in the system, do the calculations. You'll be invited to apply, submit the relevant information, and then all being ticked off, you will get that grant being paid to you on or around about June. I would say because of the volume of work that's going to be done, it's going to be realistically probably around about July before that money comes in. Now, let me be not so much a party pooper, but just to add the little bits of compliance here. Some of this I'm going to take an educated guess as to what they're going to do. There is an element in what they've said is you're not just going to get it because you're self-employed. You're going to get it if it's the recent COVID-19 outbreak has had an impact on your earnings. So have you suffered as a result of the COVID-19? They haven't said how they're going to check that. I've got my own views about how they'll do that, and I'll share that with you in a moment. But effectively, it's not just, am I self-employed? Tick. Do I get the financial numbers? Tick. I've got my accounts in? Tick. Therefore, I'm going to get the grant. Not necessarily. So it depends about a loss of income due to COVID-19. I would suggest if you have had that impact, so you've had to stay at home, all of you will know that you've had an impact in losing clients, whatever your status is. Document it, make a diary note for now. My view would be when the 1920 tax returns are submitted, it's likely HMRC will be using those figures to also cross-reference and check against that loss of income. Now, perversely, by the way, the self-employed can still carry on working. So we're going to talk about furloughing later on during this session. But if you're self-employed, you don't have to stop your self-employed activities. You can continue. It might seem unfair. I don't make the rules, but that's the way they are structured at the moment. Let me do a quick check, making sure I'm not running ahead. Now, Pam, do you mind? So can I just say, by the way, everyone, ask as many questions as you want in open forum. If there's anything particularly sensitive, by the way, for your personal circumstances, I would recommend you not necessarily sharing them, and by all means contact me separately. So just bear in mind, about what you're going to be sharing in open space. Now, Abir, I'll deal with your question secondly. Now, if you've got a situation where you've worked very hard, as all of you do, you built your business up to such an extent, and unfortunately, COVID-19 has decimated your business, dramatically had an impact on there, and you lost income as a result, the only immediate relief that you're likely to get for that is one of two things. One, you can look to reduce what's called your payments on account. Now, the payments on account, which I'm going to mention again later on, is an instalment of tax that you owe for July 20. Automatically, HMRC says that's going to be delayed. But if you anticipate, actually, it's had a massive impact on my earnings up to the end of effectively this current tax year, we can make a claim, or you can make a claim to reduce that second payment on account anyhow. The only other arena, again, it will depend on personal circumstances, and again, I'm going to flag it up later on, is potentially looking at things like universal credit, ESA, or some other a benefit system here to support you. Failing that, at the moment, again, unless you occupy a property, there's not a great deal on the table, and therefore you are going to lose out. Now, coming back to a bit, you've asked a question there. I'm going to answer that. Now, self-employed, by the way, how you generate your money. So I've got a lot of self-employed individuals we look after. If you're self-employed, so you're not a company, and your income comes from grant paid to you, consulting, whatever you want to call that, you're classified as self-employed. So where the money comes from isn't necessarily the issue. It's the nature of what you do. So Bea, if you don't mind me commenting on that, you will be self-employed. So now the self-employed, can I just clarify a couple of other things before we move on? First of all, if you complete a tax return, it's called self-assessment. Self-assessment is a system how the government actually gets you to complete your tax returns. It basically says, this is who I am. Over the last year, this is what I've earned. I've got income from maybe renting out a property. I've had a job, PAYE. I've also had some self-employment. I've got income and activities going from everywhere else. I'm going to put those in a form, look at them in total, and then work out how much tax, if anything, I've got to pay. So that's not about being self-employed. The other criteria is if you've got, let's say, a side hustle, so you work some self-employment, but you might subsidise it by having some rental property. You might also have a part-time job. Your self-employed profits have got to be at least 50% of the total mix there as well. So if it's a part-time self-employment activity and say 80% of your money comes from working for an employer, then you won't be eligible for this grant. I think that's the amount, that's the claim, that's the timing. And again, we don't yet know, by the way, what compliance activities will be. My suspicion is make sure you've got it documented somewhere about the loss of income from COVID-19. So while it's relatively fresh and you're pressing, I would suggest get a notebook out, make some notes, store them away in case you need them. My view would be, of having dealt with HMRC for about too many years to remember, is there will be some compliance audit activity. So therefore, just make sure it's belt and braces. You've got that there and covered that. Any other questions, anybody, on the self-employed element before we move on? Okay, fantastic. I'm just going to breathe for a few seconds. Put those glasses on so I can see what I'm doing. I'm just going to grab a switch. Okay, so that's the self-employed. Now, there are some overlap bits, by the way, which we'll talk about in a second. Now, this is, I think, something that's actually been occupying quite a lot of people. And let's bring it up and show it there. So we're talking about this wonderful thing called furloughing. What it means, eligibility, compliance, the amount, the claim, the timing, and so it goes on. And in the second section, by the way, I'm going to talk specifically about director companies here, because obviously that's been quite anxious. There's been quite a lot of what I call confusion. Interesting question, Sam. Pam, I'm just going to pick up a question from Pam here, everybody. She's saying, is it a possibility they may increase to 50k? Okay, let me cut to the chase here. I would probably say, yes, it is possible. So when the budget was first announced a couple of weeks ago, there was a grant initially offered of 3k for helping people who've got what they call small business relief. That then went up within a space of a week or two to 10 grand. Number two, if it does happen, it's likely to more happen to people who have got at least a full year's worth of accounts. My planning assumption, though, would be forget you're going to get it, because the reason I say that is twofold. Number one, not because it's not justified, not because it's not a valid claim here. The government are going to feel they're going to have to draw the line somewhere, and they might take the view that if you've got income from renting out property is never seen as a business. So there's very little relief given for property investors there as well. So my gut instinct says, Pam, I've not read anything yet that suggests a 50k threshold may go up. Is there a possibility? Certainly. If I was a betting man, I would say no, purely because it's just number game for them and volume and all the rest of it. And because what they'll also say, Pam, unfortunately, is that 95%, maybe a little bit less now, of self-employed people fit into the bracket they're doing here. So there's going to be winners and losers, and unfortunately, that's possibly, in my opinion, going to be the loser category. But again, never say never, but in terms of planning, assume it's not going to happen. Now, let's come back to this idea of furloughing, what it is and what it isn't. So first of all, this is a new term. Predominantly, it's used quite a lot in the United States, by the way. And what it means is the policy initiative behind it is not to make people redundant. So what the government didn't want is, because of the COVID-19, because of guidance, brackets, instructions, brackets, police saying you can't leave home, had a massive impact on employers. And remember, employers can be sole traders or partners or companies or charities or local authorities. So doesn't matter what you are, everyone is capable of being an employer there as well. From charities are included as well as sort of not-for-profit organisations, companies, individuals can all be employers. Now, what this means is, if you have made somebody redundant, they're not furloughed. If somebody's on sick pay, they're not within the scheme or being furloughed. It means two things. Fundamentally, and there is a process as well, somebody is at home, but they're not actually doing any work for the company, but you are still having them on your payroll. Now, having them on the payroll, effectively, depending on the contract you've got, so if you've got a salaried member of staff, two things are, because it's in that era of what's called a redundancy situation, a change of economic circumstances, it is legally possible to, obviously, subject to what the contract is with the employee, to negotiate a reduction of salary. If you go below 80% of the salary, based on what I've seen, you will not be able to claim furloughing relief if you want. It's called the job retention scheme here. Simon, if you're okay with that, I'm going to address that on the next section. And that's quite a common question. So Simon's asking about company directors, which I'm going to deal with in a moment here, because there's a little bit of complexity, but possibly some good news for company directors. So furloughing is very possible. So they mustn't be laid off. You've got to pay them at least 80% of the salary there as well, with negotiation of that there as well. Crudely, HMRC expecting people to be kept on the books. They anticipate that movement in regular salary itself. If we start on the base point, there's no salary reduction. You've got two problems. Number one is funding that till the money comes in. And again, it's an online portal that's being built. It hasn't finished yet. There's going to be checking, compliance, and then you'll have to submit the details to HMRC. Now, critically, the employee must not be performing any work for the company. So if you've got them to work at home, technically speaking, they're not a furloughed employee. They're effectively redundant in terms of activity, but not redundant in terms of the statutory meaning of that. So they mustn't be working, and you mustn't give them instructions. You mustn't give them work to do at home. If you were to say that this is an alternative way of doing things, they're not fitting the criteria of furloughed. Also, there is a process to go through. So subject to whether you've got employment contracts, HR, company law and employment law still arrives, by the way. So you can't just say you and you're furloughed. There's got to be a process. If they've got employment contracts, again, technically speaking, those contracts will still stand unless they're renegotiated with the approval of the employee. Other thing as well, by the way, the minimum period of time that's going to be eligible for an employee to be furloughed is 3 weeks. So if somebody's off for a week, they don't currently fit the criteria to get the 80% of the wages back. They've got to be off for 3 weeks because the claims are going to be circulated every 3 weeks as such. So again, be careful of the eligibility. Minimum period 3 weeks. They've got to be on the payroll, and they've got to be on the payroll as at 28th of February 2020. So that means if you take on somebody and you put them on the payroll from the 1st of March, unfortunately, you will not be able to claim anything in respect of this relief itself. It'll be quite strict and quite tight. Remember, by the way, every month that you run a payroll for, that information will be submitted to HMRC. So they will be aware who's been appointed, who's an employee or not, as the case is. Now, in terms of other things to bear in mind, apart from the HR situation, somebody can refuse to be furloughed, by the way, because you might say, I just don't have the cash. Again, just be careful that you don't breach any employment rights. There's no potential claim if it's done unfairly for any unfair dismissal or anything of that nature. So again, one other housekeeping exercise. For those of you that we look after, we've already started doing this. You need to make sure you can identify who is a furloughed, if I'm pronouncing it correctly, who is furloughed employee. I'm just going to say at home. Effectively, so you need to clearly mark who they are. So if you are running your own payroll systems, then somewhere you need to make sure that employee X, you ring fence them as one of these furloughed employees. So again, where we are looking after you, we're doing that already. If you're running your own, just make sure you mark it clearly, because when you make the claim, HMRC wants to know what the differentiation is and who's what as such. Now, I think we've covered most of the ground. So we talked about levels, we talked about the compliance, we talked about the amount. Remember, you'll be invited to make the claim as such. So it's an online portal. Remember, there's nothing you can do at this moment in time. Listen, I would say there's a possibility. They're saying around about end of April. It could be a little bit later. It might come a little bit quicker. HMRC are chucking money, systems. They've got to fit in all the feeder systems they've got. And if you imagine doing anything IT at home, just extrapolate beyond a larger number, and it's going to be quite an interesting exercise there as well. So they're working, bless them, behind the scenes to get it done. Okay, good question, Matthew. So they start the week before the lockdown. If they started before the 1st of March and you paid them for that week, or so they've been on the payroll that time, they are eligible for the 80% claim. If they're outside of that 1st of March, so they started after the 1st of March, then you can't claim anything for them in terms of refund. But yes, definitely go down and to claim credits. As a general point, and I appreciate it's going to be dealt with on another slide here, so it might feel like I'm jumping all over the place. As a general rule of thumb, which we'll meet later on, if in doubt, my view would be always go forward and have conversations like claiming and put those things into place. So if that answers your question, Matthew, anything, if you started after the 1st of March, you as the employer will not be able to recover 80% of their wage costs. Secondly, you cannot adjust the wage to say this is what I'm getting back from the government, so let's make it work. So the government expects effectively you largely to keep them on the payroll. They'll accept a 20% reduction on the redundancy environment we find ourselves in. Anything below that, technically speaking, you will not be eligible. And if you do claim it when in that situation, it's not right. In terms of HMRC will police it very actively. Now, one other thing, by the way, just in terms of timing, I will point out, by the way, because a lot of legislation hasn't been published. I base it on, I won't bore you with how I know these things. Based on my interpretation, is if you've got a situation where you've furloughed somebody on, say, the 15th of March, and the reason that you've done that is because of the COVID-19 outbreak, HMRC will allow you to backdate the claim to the 1st of March. So even though you may not have made the decision, you may not have finished the process, you may not have completed everything until, say, the 15th of March or so, if it's as a consequence of the COVID-19, which is not going to be difficult to verify. So again, keep records, keep notes. You can make the claim from the 1st of March onwards. It's valid for 3 months, by the way. Again, depending where we find ourselves in 3 months' time, they will look to extend that. So you've got to have a 3 weeks minimum period effectively not working. They mustn't carry out any work activities for you. They mustn't be doing anything to generate revenue for the company, and that's absolutely critical there as well. So everybody, I'm just going to take another sip of water, give you a chance to sort of breathe from there. Anything that anyone wants to flag up? If not, I shall just leave you to populate the chat box, and I'll carry on with the next one. Now, there's some outside possibilities here. And remember, by the way, if you've got somebody who does work for you as a freelancer, they are not an employee. There's got to be a payroll scheme, a PAYE scheme set up for you to be able to claim this 80%. Now, a massive conundrum has been, and lots of people are very worried, there's a lot of corporate people operating their companies as what I call directors of their companies, brackets employees. Now, let me get a bit of language in here, first of all. So I'm going to mix up a little bit of what I call a little bit of company law, a little bit of terminology here, because it's important to understand the differentiation. In legal terms, a director is actually one of two things. You are an officer of the company, and you are potentially an employee of the company as well. So you wear two different hats. Now, that is important, by the way, for two reasons. One, because if you are a director, you might have other directors working with you and no other members of staff. Certain things don't apply to you, like minimum wage regulations, because of what you might have. It's called a service contract, and so it goes on. Now, based on, and I've got the name somewhere. Now, based on what I've read, and this is confirmed. So, Matthew, the short answer is yes. In a moment, I'm going to reveal it. Now, the current opinion has been, by most people, up to about a couple of weeks ago, that if you are the owner, director of your company, working as a director, typically taking out a wage, topping up with dividends, you are not going to be able to claim this 80% relief here. Again, my personal opinion has been, if it's structured credit, you can do. Now, it's been confirmed, and I can quote the name if you want, by the senior advisor to the Treasury, a guy called Ben Kerry, that actually director companies can actually claim the 80%. There are some guidelines and criteria that have got to be applied. So if you are, as Simon has described, okay, I'll pick your point up in a second. So Simon raised a point about being a company director and employee on PAYE. Yes, you can. Key thing is you mustn't do any work for the company. And what that means is you mustn't be talking to clients, keeping them reassured. It's going to be locked down. However, as long as you're doing that and you're not actually doing any work, so when I say you're putting your feet up, I know you're not putting your feet up, but if you do nothing at all, you don't carry out any activities for the company, that's the official guidance, that's the official legislation to be. You can do what are called statutory duties. So as long as it's like in saying, I've got to complete my confirmation statement, I've got to do something in my role as an officer of the company, I'm just doing my statutory duties, that's fine. And therefore the 80% reclaim is going to be perfectly valid. Does that make sense, everyone who's in that bracket of being a director of their companies? Yes, you can. It's been confirmed by the senior policy advisor even to the Treasury. That was confirmed literally, I think, about a day ago that I saw it and read it. I've checked other bits and bobs as well. So my opinion would be, which might change next week, is yes. So if you're a director, yes, you can. Now, that's a good question, Yvette. So let's talk about furloughing. There's got to be, yes, the answer is yes, you can. You can have one director furloughed. I'm sure I'm not pronouncing it correctly. If you don't mind, everyone, because I'm making a pig's ear of this one, I'm just going to say staying at home. So you can have one director staying at home, that both directors can be staying at home. But however you do that, there's got to be a fair and equitable way of doing that, which sounds a bit bizarre when there's maybe only 2 or 3 directors. So it can be one or the other. Minimum period is going to be 3 weeks, though. So it may be one is off for 3 weeks, they're unable to come in, and then one comes back in. Thank you, Simon. Now, other thing just to mention, by the way, on this here, the pay calculation, and my head's a bit full at the moment, is based on average wages. It's the wage as at March 20, or subject to how many months you've been going, they can average it out. So does that, if that answer your question, by the way? Probably or probably not here. Now, can I just point out, everybody, I appreciate you're going to have some detailed questions here. So if there are any things that aren't quite met, if I take that one offline for you, if you don't mind, but it's going to be based, in fact, let me see what I've scribbled down here. Just talk amongst yourselves at the moment. It's going to be based on, just talk amongst yourselves for a moment or two. Who can claim? What did I scribble down? Yeah, so effectively, it's going to be based on the salary as at February 2020. And that's fine if that. I mean, I know we've got a conversation to catch up anyway, but effectively, remember, they've got to be on the payroll for February 20, and it will be based on the February 20 payroll. Again, there are some exceptions, and again, if you don't mind, I'll pick that up one later on. So effectively, for me, what seems to be like a big worry for lots of different sectors, if you're an owner-manager of your own company, you're a director, you've got a salary that's taken out, as long as it's run through the payroll, that's the key thing, then you will be eligible to make this claim. It's not going to be big numbers, but the way I would look at it, every little bit helps that goes into the pot. Realistically, remember, the timing is such, it's not going to happen, if you're lucky, until around about April, and nobody has actually know, roughly speaking, what's going to happen. But if anyone says, oh, well, I know exactly, they're actually lying out the backside. All right, let's carry on. Now, the next thing I want to flag up, everybody, is universal credit. So let's just see what that is. Put it back on the comments. So on universal credit, now there's, again, a couple of things here. So this applies to anybody in an individual capacity. So if you happen to be the director of your company, if you happen to be self-employed, if the income is such that it's quite difficult, then there's I wouldn't say it's a lifeline, but it's something that's going to help, in terms of when finances are stretched there as well. In terms of the actual details of that, there's something called ESA, by the way, which is based on national insurance contributions, typically averaged out over the last 2 to 3 years. There's also universal credit. I believe they can be run in conjunction as well. To be fair, I know quite a number of people who've actually applied for universal credit. Don't delay. There is the opportunity to backdate it if you haven't done it already. You don't need to attend a job centre, obviously not, because we're on lockdown, but that's normally a criteria. And they have relaxed what's called the minimum income floor. And what that is, it says, based on how many hours a week you're working, based on lots of weird calculations, there's a minimum income limit that's there. That has now been dropped. They've also added about an extra £1,000 a year, by the way, to the claim. Again, it's not going to necessarily mean you can retire to the Caribbean. It's something we've all paid into it. So if in doubt, go through the process. It would be my advice. Don't sit back and think, well, I can manage. It's there. Everybody, your children, adults, friends, all of us are paid into the system. Access it. That's what it's there for. What it also does, by the way, if you live in rented accommodation or you've got other housing costs, there's the facility for universal credit to tap in to other support mechanisms as well. Something I already mentioned on the broadcast last week as well is if you go to check out Martin Lewis's site, there's a fantastic area on credits, how it works. Obviously, you can't claim through Martin Lewis's site, but it's got good background information. And there's a section I would refer you to, which talks about other benefits that you may get there as well. So again, what my experience with the benefit system is, it happens quite a lot. Yeah, I would do quite a lot. Pam, I'm going to come to your question in a second. So look at it. Now, remember, it's based on lots of different things. So if your income is likely to be very wobbly and you dramatically lose that, especially the pressure on if you've got children, you know, it's an anxious time. Get on the HMRC site. To be fair, it's a relatively smooth process. I know lots of people have gone through it and they've managed to get a response very quickly. Anticipate, in some circumstances, it can take up to 5 weeks. My experience has been a lot of people have got that turnaround much more quickly than that. So get onto it. And Pam, in your situation here, my answer would be yes. If you're anticipating a huge loss of business, they're going to ask you questions and all that sort of stuff, but get onto it as soon as you can. And the worst that will happen is the computer will say, go away, you're not going to get anything. If in doubt, do it now. I think that's it. So that's meaning eligibility, amount. I'm not going to bore you to death with all the details on how much you're going to get because it depends on so many different variables, and I probably couldn't tell you exactly anyway. But effectively, it's there. Go through the system, universal credit, brackets, ESA. It's all well explained. If your head's hurting, from what I'm saying, the answer is yes, by the way. You can apply even if you're still working. So universal credit, by the way, just to give you a bit of boring information, background, it's replaced working tax credit. So for those of you who remember something called working tax credit, when your business was starting or your income's not quite there, it says you've got to be working so many hours. You can have income from self-employment or from a job, and then you can apply for working tax credit. Universal credit replaced that and other benefits as well. And by the way, you can be you're at home not working type worker, because I'm not going to pronounce that F word, and you can also claim for universal credit. So again, universal credit claims doesn't mean you've got to have nothing at all there as well. Just as a small thing to bear in mind, by the way, there is a savings limit here. If you've got savings of 16 grand and above, you won't actually get it. But what I would say is go through the process. If you've got, if you're fine, you've got oodles of money, and you don't need it, and you think, why bother, then that might be a different consideration. But do it. Doesn't automatically mean you'll get it, but you need to go through the process. So, Pam, answering your question, the answer is yes, you can still apply if you're still working. All right, what have we got? Delights have we got next, everyone? So I'm just going to have a break for a moment or two. Hopefully I'm not losing everyone with this rat-a-tat, by the way. I know there's a lot that we're getting through. Let's pick up the next one, shall we? What have we got coming up next? Now, this is a weird one. I like this one, only because of the timing. So let's have a look. Let's have it on the screen. Now, I've just thrown that slide in, by the way. You may, if you've been reading stuff on the internet, if you've been hearing people talk, one thing this crisis has done is throw in some language that even though I haven't come across for quite a long time. So the word hereditaments, by the way, is just a posh word for premises. Now, whether you are a sole trader, whether you're a company, if you're trading outside of your house. So you've got a premise, it can be an office space, it can be effectively a small factory. If you're running from a premise and you are in the business rates system, so even if you get what's called small business rate relief, then if you're in that system, you pay no rates, and this is, applies to effectively anyone who effectively has got a property. So if you work from home, this, what I'm going to be talking about, doesn't apply to you. So that's unfortunate. If you're a home-based worker, you won't get this relief, and it's called herediments. Now, there's two levels of grant, by the way. There's a £10,000 grant, and the grant by nature means it's not repayable. Number two is if your rateable value of the property that you occupy is 15k and below, brackets, you get what's called small business rate relief or rural relief if you happen to live in the countryside. This claim will be made to you. You don't need to do anything, by the way. It's the local authorities who will be doing the processing there as well. Now, it varies. The local authority will have a database of everybody in their jurisdiction who obviously occupies a property. So as long as your name is in that radar, then you will be eligible for a claim there as well. They will be able to look down to see who's claimed the small business rates relief or rural relief if you prefer, and that money will be paid over to you. Now, I've got some clients outside of where I sort of live who've actually in receipt of this grant, so it's happened quite quickly. It's going to vary up and down the UK how quickly this thing will actually happen. Now, the second type of grant is a 25,000. Typically, that goes up to £51,000 worth of rateable value, and that's for people who work in what's called the hospitality, retail and leisure sector. Thank you very much, Shani. Thanks for all your support as well. So in terms of if you run a pub, a club, a music venue, if you happen to be a museum, a gallery, that's within that sort of leisure sector there as well. There's a few other ones here. You will be eligible for a £25,000 grant. Also, if you've been getting small business rates relief this year, by the way, it's going to be given automatically for year 2021 as well. Eligibility, as I said, will be based on effectively what sector you're in and also the rateable value of your property. If you work at home, you're not getting anything. There is possibility, if you do work at home and you've got a separate space and you've applied for business rates on that, well, nobody applies for it, but if you're business rating at home, then you'll get it. But my view would be probably 99% of people who work from home aren't actually assessed separately for a space that's subject to business rates. So I would just say my personal view is if you're not on the local authority's radar for business rates, then you're not going to get anything under this heading. Claim timing, they expect that to come on board. As I said, some people have got it on board already, and it's the local authority who are driving it. So if you get any mailers saying, we will do this for you, just do X, Y, and Z, tell them to go away because they're not doing it, the local authorities will be doing it. All right, let's just take a breath. Let's have a think here. Let's go in here. Now, again, what I'm trying to do here, everyone, is to pretty much cover the vast bank of all the stuff, the financial helplines, lifelines that are out there to help us all. So debt. Now, effectively, if it's government debt or household debt, there is the options to delay it, to defer it. What that means is, though, you will still have to pay it at some point. However, when you're looking at your action plan about, okay, and I'm going to mention this at the end, what that action plan consists of, there may be a decision that's made to say, actually, look, fundamentally, it's going to be a rubbish time for the next few weeks, few months. Fundamentally, I just need to get through the next few weeks and few months. Fundamentally, I'm still going to carry on doing what I'm doing, albeit I'm going to have to might rebuild. Now, one thing I want to do is to actually delay paying some debt, whether it's business debt or household debt. Now, the debt that is statutorily deferred for you will be your payments on account that are due in July 2020, and that will be if you are effectively self-employed. So again, it seems unfair if you happen to have payments on account from another activity, but if you're self-employed, payment on account coming from July 2020, it's automatically delayed for you until January 21. What that means is that when you come to your tax returns for this current year, 1920, any tax that you might owe, you'll add the payment on account that you delayed as well. So factor that into your cash flows. The advantage goes as follows. Interest is deferred on that, so you won't be charged interest on that delayed payment. You won't be charged a penalty on that delayed payment either. So for me, it's another financing cost here. There's nothing to stop you, by the way, paying it in full. It's just automatically HMRC will delay it. You can pay it if you wish to. You can pay half of it, some of it, so they still give you the option of paying it if you prefer. Number two, the other statutory one that's delayed is VAT. Now, VAT that's due to be paid between the 20th of March, he says, and the end of June will be automatically deferred for you. That will be due, the bit that's being deferred in that period, until the 31st of March 2021. Again, no interest on the delayed payment. HMRC will do it automatically for you. However, my strong recommendation, repeating what I said the other day, if you pay your VAT by direct debit, cancel that direct debit ASAP, because HMRC will not be cancelling that direct debit for you. So if you are going to delay, I would suggest strongly that you cancel your direct debit with immediate effect. Otherwise, the money will be taken out anyhow, and it's going to be notoriously problematic to get it back. And remember though, the debt doesn't go away, it's merely delayed. Now, other debts that you might have, so for example, PAYE, corporation tax, then that's for you to have to contact HMRC directly and speak to them. There's a dedicated number which I shared on the last broadcast. I'll share it again. If I haven't got it on this one, I'll share it out later on. There is a dedicated phone line. Again, being realistic, think about the volume of people who are going to be using that number. Be patient, but effectively get through. They've thrown more resource at it, by the way, to actually get more people manning those lines here. They'll do it on a case-by-case basis. So if you've had, I would assume, if you had a payment plan already and you've not honoured it, they're less likely to grant it. But effectively, it's there, the facility for other taxes. But you've got to talk to them. At the moment, from what I've seen, there's no facility to waive the interest on a time to pay proposal. The only one that's been agreed that I've seen in writing is the ones on VAT and the payments on account if you happen to be self-assessment. Remember what we said earlier on at the beginning though, if you've got delays, so let's say circumstances such that your income this current year has just collapsed and you know that you're going to pay less tax, you've got two choices. Number one, if we look after you, we've organised the staff office. I'm on a skeleton staff at the moment, but you know, people are coming back in next week. We will do our best to get your tax returns to turn around pretty quickly, so you know what's due, and you've got until July to get that sorted. Either way, you know, you can still make a claim to reduce your payments on account, even though the year's not finished. I think that makes sense. Other things like debt that you could delay, if you've got mortgage, of all the lenders that are on there, pretty much most of them have got their own system, so it's either online or on the phone. My experience has been based on people I've spoken to, there's not normally a problem delaying the mortgage payments. Bear in mind, by the way, most mortgage companies, not all of them, Martin Lewis has got a link on this one, which is quite useful, well, basically means it's increased payments for the following months. But it's breathing space, stops the anxiety building up, because effectively the thing that's going to get us all through this, by the way, one of the key number quantities is cash. So this is predominantly a cash flow exercise, as well as a rebuilding exercise, etc. So for cash planning, if it's like, actually, this is really tight, because these claims won't come in till then, I need to buy myself some time, look for things like loan relief, mortgage relief, in terms of delaying those payments that are going to be made in your personal household income. Now, I've also rounded up, by the way, a few other bits and bobs that I think will be quite useful. Again, I can't guarantee you're going to get anything from these, but these are just pots and places to look for and other things that we need to be aware of. Insurance. Now, the vast majority of insurance policies will not cover you for a pandemic, which is what we're having this described as. However, some insurance policies have a provision for what they call business interruption. So if in doubt, check your insurance policy, check the things there, and explore that with your insurance company. I'm not an insurance broker, but again, it's unlikely they're going to cover you for pandemics. There will typically be an exclusion in there, but there will be facilities in some insurance policies to allow for business interruption. And for example, it could be that if you've got guidance to stay at home, business has been interrupted, etc., there's a potential for a claim from your insurance policy. Other benefits we mentioned earlier on. So if you're accessing universal credits, if you're on ESA, there will be other benefits that will give you some assistance and support in terms of from housing, medication, other things that you might get. I mean, we're on lockdown at the moment. The world hasn't come to a complete halt. It feels like it, but there'll be other things that you may find some access and help with. The loan scheme is what's called the Business Guarantee Interruption Scheme. It's underwritten by the British Bank. My view, and it's a personal one, by the way, you do what you need to do if you've got solid foundations there and you need to buy some time. Some clients of mine and people I know are going for this loan scheme. I would typically say if you can avoid it, don't take in any more debt by borrowing more money if you can avoid it. If you do go down this scheme, there are 40 lenders on the panel. I think I've shared the details with that on a previous mailer. And on that there as well, you'll still have to jump through the hoops. Now, there are stories going on, by the way, that some of the banks haven't actually played ball as such. Now, this could be anecdotal stories in terms of, one or two examples of, a grumpy lender. But here's how it's happened. You've got three parties. You've got the government with a big bucket of cash. You've got the banks, 40 of them, last time I looked, and the government have said, there you go, banks, have a big wad of cash. We want you to now, if somebody comes to you and they want to have a loan holiday, they want to access more funding, they want to access an overdraft, what we want you to do is to be a bit more, bit more cuddly with them. Cut them some slack and all the processes that you go through, because we're going to be underwriting or guaranteeing 80% of that loan, we want you to be nicer to them. So effectively, the risk to you is going to be much less as a result. Now, some banks have done that, some banks haven't. They will have their own procedures. You have to fill in an application form. They're going to want numbers. They're going to still risk assess it there as well. So just bear in mind, if you do go down that route, make sure you check with the lender what their credentials are. If you want to look at alternative lenders, give me a shout. I can share some contacts that I've got. We don't make commission on this, by the way, but we can share some lenders to talk to. But again, I would suggest if you can, use it as a tool of last resort, as opposed to the first thing that you actually do. Company's House, by the way. Company's House, so you've got accounts due to be filed, then Company's House have permitted a 3-month extension. We've taken a liberty, everyone. For those of you that we look after, we've automatically gone for the extension for everybody, just in case. We're hoping in 3 months' time things will be a little bit better there as well. If you do your own stuff, then make sure you or your advisors get the extension on the Company's House deadlines. If you don't, and the accounts are late, then strictly speaking, you're going to be fined 150 quid there as well for the first month. Now, remember other things as well. So if you've got VAT, if you've got PAYE, if you've got anything else that's got to be filed, there is nothing in the legislation at the moment that says you don't have to submit any documentation to us. If you're a charity, there's nothing at the moment that says you don't have to send in a charity commission return. These are all still have to be done. So make sure somehow those are done. Obviously, if we're looking after you guys, we're taking care of it. If you're not, you're doing it yourself or you've got somebody else, just make sure they're on the ball, because at the moment, there's nothing built in to say we don't want to see the documents. You've still got to get that side of things done. Getting that paperwork in, the returns done is one thing. Paying the money is a different conversation. Okay, a couple more things to go through. So we said that. So what are we going to look at now. So what we're going to look at, and this would be for me, probably if you can, one of the first things you should be doing itself. So for me, in terms of the risk of probably sounding quite tedious here, you've got lots of decisions, lots of pots to tap into, lots of things to do. Do I delay things? Do I pay it now? There's a lot of incredible uncertainty itself, and I really sympathise with that. We're in a similar position. So I'm running on a skeleton staff. I'm not saying to feel sorry for me, but I fully understand about the anxiety there is. All of us have suffered financially in some respect or another. But for me, what I would start off with saying is figure out what's going on. What do you think is going on with your business, cash flow terms, certainly over the next 3 to 6 months. Once you've got an idea of what's coming in, what's going out, and what the shortfall or the surplus is month by month, then you can make some decisions about what you can delay, what you can pay now, what you can do to actually look for alternative options. And that's critical that you do that. Number 2, this is all about business continuity, okay? Making sure, because all of you do brilliant stuff, so the demand is still out there. It may change. You know, some people might think they're going to move direction. So fundamentally, it's about getting through the next few weeks, but obviously still being strong enough to carry on thereafter. Now, I'm going to throw in a couple of things I'm going to pick up in another session if you're interested. I will have ready for next week some resources here, what I can share with you. So we're going to do whatever we can that doesn't require any cost implication for anybody. So we're going to share lots more stuff. And it's going to be on cash flow planning. We've already published some stuff already. And we're going to give you some tools that you can play with or use to help you come up with those cash flow decisions. So if you say, have you got a cash flow template? I've literally just finishing off one. It'll be available for distribution very soon. We're talking days as opposed to anything else. There's some guides and other stuff that's going to go with it, so that's going to help you. Now, pivoting, just think about this. Some of you, because your working habits would have changed, you know, suddenly may decide that actually these last few weeks or whatever has been quite bad, but actually there's other ways that I might be looking to develop parts of my business there as well. So for some of you who might be trading face-to-face, you know, you might be doing more online work. Some of you may decide to actually develop something else in your business. So pivoting is that thing that you may consider doing. And again, if there's interest, I'm going to bore everyone to death about it. I'm going to share some information on that over the next week or two, if that's your way you're thinking. Okay, everybody, I think I'm going to get told off for not drinking enough water, so I'm just going to grab a sip. Okay, everybody, I'm just going to sort of breathe for a moment or two. Is there anything here that we've covered? Anybody's got on questions-wise they want to throw in that we've not covered? Okay, I think I've answered most of Simon's. That's all there. Well, listen, all I can say to you, I hope that it's been useful. I'm going to share, what if I said at the end? If you do need to get a hold of me, by the way, this is the last bit I was going to mention. Where are we? 2 things. Right, because I suppose the way things are going in terms of communications in the office, I've set up a dedicated email address that's focused. That means other people apart from me will pick up the email address and pick up the mail. So that means it doesn't get lost or buried. So that's like clients@proactiveresolutions.com. If you can, use that one more to contact me and the office, because it's now being centralized. We're trying to be grown up and organized about these things. And if you're bored later on and you fancy hearing a bit more about cash flow, I've just published the title of a podcast there, which is specifically, I think, talking about cash flow forecasting in these times. So all I will say is, if nobody's got any more questions, thank you for your time. Yeah, thank you, Richard. And thanks for all your support, everyone, by the way. So really appreciate passing it on to everybody about your nice words and comfort. And listen, I know it's crap out there at the moment. So listen, can I just leave off with 2 or 3 things here? There are lots of people out in the world much cleverer than I am. There's lots of people out in the world who probably couldn't actually quote chapter and verse on this stuff here. However, let me be very careful. Just be very careful not to go to, I'm not saying don't look at what's going on, but there's a lot of stuff that's going on that is actually not quite correct. There's a lot of stuff that's repeating what's in the public domain already, like HMRC pronouncements, and your head will explode with it. Mine's feeling quite exploding at the moment when I was going through this. Number two, if you've got a question and we look after you, or even we don't look after you, direct it to us. We'll share, if we've got an answer to that question, we'll share it back with you. It'll be on the regular mailing as well. Be very careful of scam artists out there who often do all these things, and be careful of Dave down the pub, which is probably not a very good thing to say if you run pubs, but just be careful of second-hand advice, because it will make it more confusing. And that's all I was really going to say here. So just be very careful, stay sensible and sane and sanguine, which is my word at the moment. This madness and turbulence will eventually die down, will eventually end, and hopefully some degree of normality will come back to our lives. So listen, everyone, have a fantastic rest of the afternoon. Enjoy the rest of the day. If there's any follow-up questions, please, by all means, give us a shout. If I don't answer you immediately, by the way, I'm not falling out with anybody, but I'm trying to respond to everyone within a very quick period of time. So please don't think I can't ask you a question because I'm busy. I'm always going to be busy. Just get it out there, get it to me. I'd rather you feel more assured. Don't worry about, whether I've got my email building up as well. Just get it done, get it across to me, and we'll deal with it as quickly as we can. So for that, I'm going to shut up now, give you some peace. Have a brilliant afternoon, everyone. And I'm going to probably bore you to death by having another one of these next week. Can I just quickly check, by the way, how does everybody feel about getting update, brackets, other stuff, I don't know, sort of at least once or twice a week? Is that going to be useful for you? If I don't, okay. I'm going to say it's a yes. Fantastic. In fact, I know we've got a call coming up. Anybody who's got any specific queries, by the way, again, I'm probably going to sound like a real nag. Please check what we've circulated first of all, just in case the answers are in there. Secondly, if it's not there, then please, by all means, contact me there as well. And I'm not saying I'm not going to talk to anyone. So if my office feels like they're being a bit, he's busy, it's saying the questions may be answered already. Check it out. If it doesn't make the slightest bit of sense to you, you think, what on earth is going on? Please call me, contact me, and we'll chat about that later on. So apart from that, fantastic. Be safe, sensible, sanguine, and, stay optimistic, everybody, as best you can. Take care. That's over and out. Will do, Richard, Kettler, VJ. Will do. Let's end that.